Welcome to this complete guide to support and resistance. It could be that you're looking to trade or invest in stocks and shares, Forex, commodities, indices. It doesn't matter. This guide is for you. If you want to learn about support and resistance, no matter which financial market you're looking to trade, this is the guide. I will cover everything you need to know about support and resistance in this one single video. I will cover what support and resistance is, how to use support and resistance as part of technical analysis, how to draw support and resistance, how to trade using support and resistance, and why support and resistance should be used, why you should use support and resistance. So let's jump right in. Let me just take 20 seconds to tell you a bit about myself before we get started. My name is Samuel Morton. I am a Forex trader. I also trade futures. I invest in stocks and shares. And I've been doing this for about 15 years. This is my YouTube channel, Actual Forex Trading. You're very welcome here. So what is support and resistance? Sometimes support and resistance is abbreviated to S and R for support and resistance. Sometimes it's referred to as supply and demand. It's like a supply and demand zone, something like that. It all means the same thing. It's support and resistance. But what actually is it? What is support and resistance? Support is an area on a price chart, an area within a financial market where price is likely to reverse from bearish to bullish. It's a reversal area. It's always below the price and it keeps price up. And I'll look at some examples with you in a moment. Resistance, once again, is a reversal area. But this time it's above the price and it reverses a bullish market to bearish. So upside to downside. Support and resistance. So let's have a look at some examples. Support. You can see that dashed line across the screen. It's a support. It's below the price. It's keeping price up. And you'll see the arrows there that represent the price. Every time price comes down, it then goes back up. So the price is bearish, turns bullish. It's holding price up. It's a reversal area. Resistance is the opposite. It's above the price. It's pushing price down. So every time price comes up to the area, it reverses down. It's above the price. The price reverses from bullish to bearish. Let's have a look at some real examples. So, Euro, Australian dollar. This is a Forex chart, but this could easily be a stock chart or a commodity chart. It doesn't really matter. It's a principle used across all financial markets. We have this horizontal support, which is this blue zone at the bottom of the screen. And you'll see that every time price reaches that blue area, that blue rectangle, that blue box, it reverses. It's a support area. And it's actually referred to as a horizontal support because it's a horizontal area across the chart. And going back to this resistance, this is a horizontal resistance. It's horizontal. It's a horizontal area, a level, a zone where price keeps reversing. And this is a horizontal support. Once again, it's just horizontal. It goes across the screen. So horizontal support, price becomes bullish when it reaches that horizontal support area. This is Canadian dollar, Swiss franc, and this is a horizontal resistance. Once again, we have this area, this horizontal area, and every time price reaches this area, it reverses. So we are bullish and we come down bearish. We are bullish, we reach the area, we become bearish. You'll see this just keeps happening and happening. The price comes up, it reaches the area, and it reverses. Horizontal support and resistance. And what I'm going to do now is show you how to draw horizontal support and resistance, as well as other support and resistance, because support and resistance isn't just horizontal. More to come. Okay, horizontal support and resistance. A few things to mention before we have a look at the charts. Number one, these support and resistance levels, areas, zones are just those things. Sometimes they can be levels, a specific price. Sometimes they are areas or zones that we can draw with a box, like I did in these previous examples here. This blue box, it's an area, it's a zone. But don't worry about taking all of this in now, because I will show you how to do these things on TradingView, on my charting platform. A few things to mention also before we get started. Support and resistance is often formed by the price action. So where price has reversed in the past creates an area, a zone, a level where price could reverse in the future. So with horizontal support and resistance, a lot of the time these reversals are formed by the price action. So by looking at the charts, we can see these reversal areas, we can mark them and watch them for potential reversals in the future. But with horizontal support and resistance, there's also psychological levels. So it's not just the price action. Sometimes it's a specific area, a psychological area where price could reverse. And we'll have a look at that. And support and resistance, horizontal support and resistance, it appears on all time frames. Look at the 1 minute chart all the way up to the monthly chart. It's universal and it works. Okay. Here is a range. It's probably a good point to mention here that if you don't know the basics of trending markets, ranging markets, Japanese candlesticks, those real charting basics, then I do have a course that will cover all those things. You probably want to learn those things before you learn support and resistance. So I'm expecting you to understand Japanese candlesticks, the swings that price creates when it trends, how the price action is when it ranges. If you don't know those things, then I have a Forex basics course. It doesn't matter if you're trading stocks or commodities, ETFs, whatever. That course will teach you all those basics. So please go and watch that, then come back here. So we have a range here. Price is ranging, pound, Japanese yen. And you see we have this horizontal support at the bottom of the screen at 197. And I refer to that as a range support. So when price is moving sideways, it ranges. And it generally ranges between a support and a resistance, a range support and a range resistance. You can see when price reaches this 197 area, it often reverses. But I'll go through some real life examples with you now. So let's jump to the charts. So this is New Zealand dollar, US dollar, and it's the monthly time frame. And what we can do here is we can look at historic reversals, and we can mark them as potential horizontal support and resistance areas. And what's interesting, as we mark them, you'll see that they have been used as support and resistance multiple times. So this first reversal here, let's focus on this reversal here. And on my chart, I'm going to use just a horizontal line like this. If you're using TradingView, you can just use the lines here at the top left, choose the line you want. I'm using horizontal ray to create this horizontal line. That's the first way, and the very simple way to draw horizontal support and resistance. So now we've marked this line, marked this reversal. What can happen is when price reaches this area in the future as resistance, because it's above the price, a bullish move turn bearish, we could see the same thing happen. We could see a bullish move turn bearish. Another way we can draw this horizontal resistance is not to use a line, but is to use like an area. So down here under this box here, the fifth box down, I have shapes, and with a rectangle I can draw like an area of reversal. And what's really interesting here is we don't just have the reversal here, which we've identified. You can see that price actually reversed here again at resistance. So this is a horizontal resistance area. Since 2015, 2016, every time price has reached this area, it has reversed, and we can mark them. So we reach the area here, price reversed. We reach the area again here, price reversed. The price reached the area again here, and it reverses. So each time this area is reached, this horizontal resistance comes into play, and the bullish market turns bearish. So can you see that? This horizontal area. So if the price was to come up again, we could expect some sort of reaction and some sort of move down. Can you see any horizontal supports? Are there any reversals where a bearish market, a downside market, becomes bullish? Well, the most obvious one is over here, isn't it? Look at this big move down, followed by a big move up. So once again, we could mark that with a horizontal line. That's an area to watch. It's a horizontal support. It's a support because it's below the current price, and it could reverse a bearish market to bullish. Okay. Another way we could mark this to identify this support is by using that area. Again, like a rectangle. That's what I use. And I generally just mark the body, the end of the body, and the wicks. But you could make them wide if you wanted to. It's really up to you. So we have this support area. So what could happen now is in the future, when price reaches this support area, we could see a bearish move or a downside move become bullish. So a move down, reverse, and come up. There's also this area down here. Can you see that? That every time price reaches this area, it reverses. So once again, if I get my box, my rectangle, and draw it like so, then you'll see that every time prices reached that box, it has reversed. So a downside move becomes an upside move. A downside move becomes an upside move. A downside move becomes an upside move. You can actually see this one in sort of real time because we're actually coming up now. We're coming off this area. Now you'll notice that I've drawn the big swings. Okay, big swing down, big swing up. Big swing up, big swing down. And I could also mark, say, this up here. Nice key resistance. Price came up, it came down. When we reached this area again, it came down. So we have that reversal. I tend to focus on these big swings because there's lots of little reversals happening all the time. But if you look at the big swings, then you're likely to get on the bigger moves. So big swings form big swings again in the future. Little swings create little swings in the future. That's the monthly time frame. We could now do the same on the weekly time frame. So we could come to the weekly here and we can look for support and resistance. Have a look at the chart. Can you see any horizontal areas where price keeps reversing? Let's scroll down back a bit and I'll scroll forward. There's definitely something around this sort of area. Have a look. Can you see a support or resistance, a horizontal area where price keeps reversing? Well, the obvious one to me is this area here. Let's bring up those arrows again. Here we go. So you can see that this box here, the price keeps entering this box and keeps reversing down. This is a horizontal resistance. It's above the price. It's pushing price down. Support pushes price up. So the other horizontal area, horizontal resistance. Now I mentioned that horizontal support and resistance doesn't have to be based on price action. It can be based on psychological levels. Now it depends on which time frame you're using, but generally the big psychological levels are those with 000 at the end. So prices that are like 0.6000, 0.7000. So if I just demonstrate this, so this could be, so we have, let's see if I can line it up. There we go. So 0.700000 is a psychological level. The same with 50000. So 75000. And you can see the 75 actually lines up well with this horizontal resistance area, probably because it was formed because of a psychological level. So these higher time frames, you want to be looking at, say, 85. And I can't quite line up the price, so ignore the last couple of digits. And 80, and 75, 70, 65, and 60, and 55. Once again, you can see 55. It lines up with this horizontal support area. The reason being, it was a psychological level. The price action kind of reacted off the psychological level and has formed this horizontal support area. And 50, once again, this lines up with this horizontal support. So on these higher time frames, psychological levels are whole numbers. That's what I'm trying to say. The 10s, the 20s, the 30s, all the way up, as high as it can go. But also the midway whole numbers, such as 85, 55, 25. These are psychological levels. These are horizontal levels where price could react. Okay, so psychological levels are horizontal levels, the horizontal areas where price could reverse, and we can draw support and resistance based on price action. That's horizontal support and resistance, using levels or using zones, areas. Any questions about this, please let me know. What I can do is bring up another chart and see if you can spot any horizontal support and resistance. This is a good snapshot here. Are there any areas on Euro US dollar on the weekly time frame where you can see clear horizontal reversals? I can see at least one horizontal resistance and one horizontal support. Pause the video if you need to. I'd say it's definitely a horizontal resistance area up here. You can see prices reversing. There's definitely a horizontal support area down here. You can see price reverses every time it reaches this area. Now moving into the why you should mark this. Trading is all about predicting where future price is going to be, isn't it? If you know a certain financial market is going to move up, you want to buy. If it's going to come down, you want to sell. Knowing these reversal areas helps with those trading decisions. If price is at a support area, maybe, potentially, it's a good time to buy. If it's at a resistance area, maybe, potentially, it's a good time to sell. There's not just horizontal support and resistance, there's also diagonal support and resistance. I'm going to have a drink, have a break. If you want to practice these things, I suggest you do. If you don't want to practice these things, I suggest you do. Have a look at the charts, see if you can spot support and resistance and mark it. And if you're using like a demo trading account, a paper trading account, you can watch how price reacts at these support and resistance zones that you've drawn. Okay, diagonal support and resistance. So I mentioned there's not just horizontal support and resistance, there's also diagonal support and resistance. And as the name suggests, they're not horizontal, they're diagonal. Once again, they can be zones, areas, levels. They can be formed by price action. Diagonal support and resistance is generally not formed by psychological levels. It's pure price action. They can show in any time frame. And I've got a note here about channels, which I'll also go through. So you can have support and resistance that creates a channel. So it's not just diagonal, it creates this channel that price moves within. And we'll look at some examples of that. Euro New Zealand dollar. This is a very clear example of diagonal support. So even though it's diagonal, the support and resistance principle remains the same. Support holds price up, and you can see every time price reaches this diagonal area, a bearish move becomes bullish. It's pushing price up, and it's the same with resistance. So even though it's diagonal, it's the same principle. It's above price and it's pushing price down. So nice clear diagonal support there. Sometimes these diagonal support areas, zones, are referred to as trend support. So you might hear that term sometimes, trend support. It's the same as diagonal support. And here we have a diagonal resistance or a trend resistance. So it's pushing price down. Every time price reaches this diagonal area, it comes down. So if you're looking to trade a trend, once again moving into why you should mark these things, if you're looking to buy Euro New Zealand dollar and trade the trend, then buying at this diagonal support area every time makes a lot of sense, doesn't it? These are great entry areas. We're getting in just before price rallies again. If we're looking to sell, go short, then selling at each time price reaches these areas, it's a great entry time. It's just before price moves down again. Okay, to the charts. Let's have a look at some diagonal support and resistance. So we're back on New Zealand dollar, US dollar. What I'll do is just clear all of this off, remove all those drawings, and let's see if we can find some diagonal support and resistance. From my experience, I think diagonal support and resistance is harder to spot, harder to draw, but it is there. The best thing to do is look at swings. So look at swings which are lower or swings that are higher. That's the best way to identify support and resistance. So if we looked at this swing here and this swing here, which is lower, and connected them, we have a diagonal resistance. It's above the price. It's pushing price down. So each time prices reach this diagonal area, it has reversed. It has come down. So what could happen in the future is if price reaches this diagonal resistance again, it could come down again. There's also some sort of diagonal support here. And hopefully I'm not going to lose you now, but if I clone my resistance and bring it down here, I've now formed a channel. You can see every time price reaches this support area, this diagonal support area, it reverses. Let's find some better examples than that. Let me just scan through the charts. So here on the 4-hour time frame, you can see there was an uptrend here, price was coming up. If I get my diagonal line, so up here, trend line, and just connect all these lows, you'll see that I have a nice clear diagonal support. Every time price reaches this diagonal support, this trend support, it reverses. Okay, nice clear diagonal support. Price came down, it reversed and became bullish. Price was bearish, it became bullish. Trend support. Now once again, what can happen is I can clone this line. So if I click on it, okay, and then clone it, you'll see that I can actually form a resistance, a diagonal resistance, and form this channel. And what I mean by a channel is we just move from one side of the channel to the other, like this. This can also happen with horizontal support and resistance, and let's just do that now while it's on my mind. Okay, so like over here, if I was to create this resistance area up here, horizontal resistance, if I was to clone that line and bring it down here, you can see this horizontal channel. So these channels are formed by support and resistance. Price moves from one side to the other. So that's what is referred to as a price action channel, or a channel. Okay, back to diagonal support and resistance. Let's try our Euro US dollar. Okay, on this monthly chart, can you see any diagonal support and resistance? Look at the swings. If you don't know what swings are, then you need to take my basics course. But look at the swings, the swing highs, the swing lows. Can you connect any together to create like a diagonal support or diagonal resistance? Pause the video if you need to. There's definitely something here. Okay, I'll draw it something like that, where we have this diagonal area where price keeps reversing. There's also something down here, and we could create a channel if we wanted to, but for the sake of time, let me just draw it. Once again, with this diagonal area below price, it's a support. Each time price reaches this area, it reverses. That was quite a hard one to spot, so if you did see that, well done you. Now you'll see that price is now above this resistance. So these support and resistance areas, they're not going to hold forever. Okay, if you were to draw a resistance, it's not always going to be resistance. Eventually, price will break through it. Okay, and the same with support. Price will eventually break a support and move below it. These diagonal support and resistance levels, trend lines, can also be drawn as areas, not specific prices. So you can see I have my diagonal support here for this trend support. Price keeps reversing at this area. What you can do to create the area is actually then just draw a second line to create an area like this. And to simplify it, you know, I can just perhaps draw the area and then clone it to create an area like this. So within this box, there could be a reversal. This is a trend support, a diagonal support. If I was to find a resistance, let's just scroll back a bit. Okay, so there's a nice clear diagonal resistance here. Once again, you can just take a line, draw it, clone it, and move that one a bit higher to create like this diagonal resistance zone, this area that price keeps reversing in. Any questions, please let me know. We are about half an hour into this thing. A good time to take a break if you need a break. I'm enjoying my Highland, is it Highland Spring? I don't know. Highland Spring sparkling water with a bit of ice. I like to call it clear whiskey because it's in my sort of whiskey glass, tumbler glass. Okay, on to the next principle. I mentioned that support would not always hold and resistance will not always hold, that price will eventually break support and will break resistance. So here we have an illustration of support breaking. So we had that dashed line across the screen. Price reverses, those arrows reverse at that line, but it eventually breaks. Now what's really interesting is the support will then become a resistance. And the easiest way to learn this, I think, is to use the analogy of floors becoming ceilings. So the floor that you're standing on, if you're in like a high-rise flat or offices, the floor you're standing on is the ceiling below. So if you moved below your floor, if you went down a floor, it becomes a ceiling. And it's the same with support becoming resistance. So as a support is broken, it can then act as resistance. And that's not just for horizontal support and resistance, it happens for diagonal support and resistance as well. And we'll look at examples of both. Same thing with resistance becomes support. So if a resistance breaks, if it fails to push price down and price breaks above the resistance, it can then become a support. It reverses as support rather than resistance. And using the same analogy, the ceiling becomes a floor. If you're in that office block, the ceiling above you, if you moved up a floor, it now becomes the floor. So what was above you is now below you. Okay, what was stopping you from moving higher is now stopping you from falling lower. So floors and ceilings. And here's an example of a horizontal support becoming resistance. Okay, so you can see those reversals at support horizontal level around about 0.62. Okay, psychological level 0.62000. Support, 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 support. Price breaks below the support area. Okay, we break below that level. Price then becomes resistance. So this is the break below. And it becomes resistance. So what was reversing price from bearish to bullish is now reversing bullish to bearish. Here we have a horizontal resistance zone area that becomes bullish. Have a look at that. See how price reverses as resistance, a horizontal resistance, 3 major times. Price eventually breaks above the area here and is now support. So the ceiling becomes a floor and the floor becomes a ceiling. Same with diagonal support and resistance. So diagonal resistance across the screen here, you can see price keeps reversing at this diagonal resistance or trend resistance. When the breakout happens, which is here, it then becomes the floor. It becomes a support. Any questions, let me know. If you need more demonstrations, let me know. In fact, on my course, on my website, so this course is available on my website as well as YouTube, there are lots of charts like this that you can have a look at, and you can magnify them too and look at them in more detail. But let's find some examples of this. So starting with Euro US dollar, this is where we left off last time. We drew this resistance area. You can see, if I just expand this a bit further, you can see that the break of this diagonal resistance area leads the area to become a support. Let's bring up my arrows so you can see we reverse down. So always reversing down off this area. But when price eventually breaks, we now reverse up. The ceiling becomes a floor. Let's have a look at New Zealand dollar, US dollar. I like this monthly chart that we were looking at. This horizontal resistance here that we marked, I think it was the first one we marked. Okay, so first one we marked in this video, horizontal resistance. If we actually bring it back to the beginning, you'll see that it was resistance over here, resistance here, support, resistance, resistance. This is a real crucial area to watch. Going back to 2005, price has often reversed around this area. Now, once again, it's not a guarantee. Okay, support is not always going to hold, a resistance is not always going to hold, and the support is not always going to become resistance, and the resistance is not always going to become support, such as this price action here. So we broke above, and we broke back below. There was no support. The resistance did not become a support. But you can see it does happen most of the time. I believe this is the second or third area that we marked, this support here. So a great area to buy, but what happens if price breaks below this support area? Well, it could act as resistance. We could see a reversal down off this area. Okay, let's look at some other charts and see if we can find any obvious support and resistance. So this is the 4 hour. If I bring up my rectangle, okay, resistance, 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 price breaks above, support, 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 price breaks back below, and then it's kind of been ignored since then. Okay, same here. Let's draw our horizontal resistance. So resistance, resistance, price breaks above, support. This stuff works. It's obviously not guaranteed, but you'll see it in every financial market on every time frame. Okay, clear support area here. So reversal, 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 reversal. We break back below, we ignore. It happens a few times, but then break back below, turns to resistance, turns to resistance. This stuff is cool. If you have any questions about how to draw this, leave them below. I am here to help. So I've covered horizontal support and resistance and diagonal support and resistance. There is other support and resistance. Generally, this is referred to as dynamic support and resistance because it's always moving. And the most common dynamic support and resistance is moving averages or formed by moving averages. But dynamic support and resistance can be formed by other technical indicators too. So let me go through some examples with you of dynamic support and resistance. So I'm back on New Zealand dollar US dollar, this monthly chart. If I bring up some moving averages, the red is a 100 moving average, the green is a 50, the blue is a 200. The principles of support and resistance is the same, that the price below these moving averages can act as resistance. If they break, they can act as support. If they're below price, they can act as support. If they break as support, they can act as resistance. So the principle is still the same, but instead of drawing, say, a horizontal area or a diagonal area, these moving averages update themselves and their areas, and when price reaches these areas, they can reverse price as support and resistance. So let's find some examples of this. Okay, such as this trend here, this downtrend. You'll see that every time price reaches one of these moving averages, we reverse down. Eventually, price breaks above and they act as support. So every time price reaches these moving averages, or at least one of them, price reverses. Now, there is a danger with using dynamic support and resistance, and that is they only generally work when price is trending, just like a lot of technical indicators. So if price isn't trending, and if price is ranging, like here, you'll find that the moving averages do not act as support and resistance hardly at all. Price just breaks through those moving averages. So there is a warning. But with trending markets, they work extremely well, such as this 50 moving average. You can see with this uptrend, price reverses pretty much every single time at this moving average, and the last time here at the 100 moving average. Down here at the 200, the blue moving average, price keeps reversing. So that's dynamic support and resistance. So I've covered all of the basics of support and resistance, including giving you real examples from real price charts. I've covered horizontal support and resistance and diagonal support and resistance, also dynamic support and resistance. And along the way, I have answered this question, why use this? It will help drastically. Okay, so if you want to use technical analysis as part of your trading, support and resistance is a must. You'll see support and resistance in action over and over again. This stuff works. But the whole reason for any of this, technical analysis as a whole, fundamental analysis as a whole, trading the markets as a whole, is to make money, is to predict future price. That's why you should use it. Keep an eye on these areas. I've been trading for 15 years. I use support and resistance on a daily basis. I love it. It works. Thank you so much for watching. If this has been helpful, then a like is appreciated. If you can encourage me with a comment, that's great. If you want to see more videos, you want to check out my website and take more of my free courses, then please do so. Please subscribe, and I'll speak to you in another video.